Quick question. When was the last time you actually checked whether you were claiming every tax deduction you're entitled to? If the answer is, never, you're in good company. Every year, thousands of Australians lodge their tax return and leave hundreds, sometimes thousands of dollars on the table. Not because they're doing anything wrong, just because nobody told them what they could actually claim. Well, that changes today. I'm Kellan from Wealth Foundation, and with the financial year ending on June 30th, which is literally this week, let's make sure your tax return is working as hard as you are. Let's go. Before we get into the deductions, there are 3 golden rules the ATO requires for every single claim. Get these wrong, and even valid deductions get knocked back. Rule 1. You must have spent the money yourself and not been reimbursed by your employer. Rule 2. The expense must directly relate to earning your income. Rule 3. You must have a record to prove it. A receipt, an invoice, a log, something. 3 rules. Every deduction lives or dies by these 3. Keep them in the back of your mind as we go through each one. Deduction 1. And this one affects almost every Australian who worked from home this year, the work from home deduction. For the 2025 to 26 financial year, the ATO lets you claim 70 cents for every hour you worked from home. That's up from 67 cents in the 2 years before. So if you worked from home 2 days a week, let's say 8 hours a day for the full year, that's roughly 800 hours. Multiply that by 70 cents, and you're looking at a $560 deduction, just for working at your kitchen table. Now here's what that 70 cents covers. Electricity, gas, phone, internet, stationery, all bundled into that one rate. And here's the trap that catches people every single year. The double dipping trap. Claiming the 70-cent rate and then also separately claiming your phone bill or your internet bill on top. The ATO calls this double dipping, and it is one of the most common audit triggers they see every tax season. If you use the fixed rate, the 70 cents per hour, your phone, internet, and electricity are already included. Do not claim them again separately. One or the other, not both. But here's the good news. There are 2 things you can claim on top of the 70-cent rate. Number 1, office equipment under $300. Did you buy a new keyboard, a desk lamp, a mouse, a power board? If it costs $300 or less and you use it mainly for work, you can claim the full amount immediately in this year's return, right now. Number 2, more expensive equipment gets depreciated. Bought a new desk for $400, a monitor for $600? You claim a portion of that each year over the item's effective life. Talk to your tax agent about how to calculate depreciation. It's simpler than it sounds, and the savings add up. Deduction 2, your phone and internet. Now, if you chose not to use the 70-cent fixed rate and instead you're going with the actual cost method, then yes, you can claim a portion of your phone and internet. You need to calculate the work-related percentage. The ATO way. Track your usage over a 4-week period, work out what percentage is work versus personal, then apply that percentage to your full year bill. A rough guess is not enough. 4 weeks of actual records. That's what the ATO expects. Deduction 3, self-education and courses. Did you complete a course, attend a workshop, or buy books or subscriptions directly related to your current job this financial year? Directly related is the key phrase here. A marketing manager studying digital marketing, claimable. An accountant studying cooking, not claimable. It has to connect to the income you're earning right now. If it does connect, course fees, textbooks, online subscriptions, even travel to attend classes can all be claimed. Deduction 4, And this one catches almost everyone. Your accountant fee from last year. Yep, the fee you paid your tax agent in July or August 2025 to lodge your 2024 to 25 return. You can claim that in this year's return. The 2025 to 26 one you're lodging now. The deduction is claimed in the financial year you pay the fee, not the year the return relates to. Most Australians have no idea this is claimable. If you paid $250 to your accountant last year, that's $250 off your taxable income right there. Now, let's talk about what the ATO is specifically watching in 2026, because they've been very public about it. 4 areas they are scrutinising harder than ever. 1. Work from home claims, especially double dipping. 2. Rental property deductions, interest, repairs, short-term letting income from Airbnb and stays. 3. Side hustle and sharing economy income, Uber, Airtask One, eBay, Etsy. The ATO receives data directly from these platforms now. If you earned money there and didn't declare it, they already know. 4. Crypto. Every disposal, including swapping between coins, is a tax event. The ATO gets data from CoinSpot, SwiftX, and Binance Australia automatically. This isn't to scare you, it's to make sure your return is clean and you're only claiming what you're genuinely entitled to. Quick note on the $1,000 standard deduction you may have seen in the news. The proposed $1,000 standard deduction does not apply to your 2025 to 26 return. It is not yet law. The ATO has confirmed, lodge your 2025 to 26 return as normal. If it gets passed, it's expected for the 2026 to 27 year onwards. So don't hold off lodging waiting for that. Your return should go in as usual. Before we finish, the 5-year rule. Every record supporting a deduction must be kept for 5 years from the date you lodge your return. Not 1 year, not the current financial year, 5 years. The easiest way to do this, use the ATO's free myDeductions tool inside the ATO app. Take a photo of every receipt as you get it. Log your work from home hours as you go. At tax time, upload it all directly to MyTax. Future you will be very grateful. Alright, Kellan's end of financial year checklist. Before June 30th, here's what to make sure you've done. 1. Log every hour you've worked from home this year. Actual hours, not an estimate. 2. Photograph and save every receipt for work expenses. 3. Check any equipment you bought under $300 for work use. 4. Note down any courses or professional development you've paid for this year. 5. Find your accountant's invoice from last year. It's a deduction this year. 5 things, 30 minutes, could be worth hundreds of dollars in your pocket. Tax doesn't have to be scary, and it definitely doesn't have to mean leaving money behind. The ATO isn't out to get you. They just want claims that are real, supported, and properly recorded. Give them that, and your refund takes care of itself. If this helped, please subscribe. Every Monday, Kellan covers a new money topic to help everyday Australians build real wealth. Next week, we're talking superannuation, specifically how to find out if your fund is actually performing or quietly costing you thousands. I'm Kellan. Take care of your money, because nobody else will.